supply chain, deconcentration from several countries including China, and Bangladesh position is well positioned based on some of these numbers according to McKinsey. You see Bangladesh's competitive labor wage. Some say Bangladesh has cheap labor. I don't say that. Bangladesh has competitive and smart labor. And for labor to skill-intensive manufacturing and services around the world, Bangladesh is the go-to place, one of the top 3 go-to place for foreign investors who are looking for reshoring, nearshoring, as well as for deconcentration of supply chain. As you see, Bangladesh, one of the top 3, in fact, the topmost for RMG hotspots. The RMG weight 71% lower than China, or even 24% lower than Vietnam. Bangladesh's geostrategic location. It has strengths for those who are engaged in strategic geopolitical engagement, but it also has strength for those who are looking for regional supply chain, regional investment. It is the connector between the South Asia as well as the East Asia ASEAN markets. If you look at Japan's Big B, Japan's Asia policy, in all of which Bangladesh appears as the most important connector, in terms of infrastructure, connectivity for better, seamless market integration between ASEAN countries and South Asia and within the eastern part of the South Asia. But Japan's Big B, the Bay of Bengal Industrial Growth Belt Initiative, is allocating billions of dollars to build energy, road connectivity, broader logistics infrastructure. And if you would recall, Prime Minister Kishida back in April 2023 announced that Japan would be working with Bangladesh as well as other regional partners to develop the regional supply chain corridor starting from the Matarbari cluster in the southeast part of Bangladesh. So that presents a great opportunity to tap into broader South Asia regional market. The Northeast India, 2.8% of India's about $4 trillion GDP, from a manufacturing, supply chain, and broader services perspective, there is no better place to serve that market from Bangladesh in the entire South Asia. If you look at investment restrictiveness, I wanted to share with you, despite a lot of improvements that Bangladesh still needs, there are certain advantages that Bangladesh offers. If you look at OECD's regulatory restrictiveness index or measures for investors, I apologize for the very small, it's so many countries in that, but if you look at, if you can see in the middle, the blue bar, Bangladesh, it's actually, the restrictiveness is far below average of non-OECD countries and almost close to the advanced economies of OECD countries. So of course, Bangladesh needs to do much better in terms of its investment climate improvement, its regulatory facilitation, but Bangladesh is very open for investment. And you can see that also in this slide, where I've just used it as a it's not an exhaustive slide. There are many other sectors, but I just made an effort to highlight some of the important sectors which are open for our foreign friends, our foreign partners, our global friends to come and investment. Only 4 sectors restricted, non-traditional and perhaps not, something that investors would be interested in. The ones which are restricted: nuclear, forestry, security printing, the currency, and arms. So apart from that, any traditional dominant global and regional sector you can think of, Bangladesh is open for our foreign investors. Now, what are some of those high potential investment specific sectors? Again, I'm going to present a few. There are many more, which in the interest of time, I would not be able to cover. Agribusiness. Bangladesh, agriculture is a sector where Bangladesh has comparative advantage. Ready-made garments, we have competitive advantage, but this is a sector where Bangladesh for hundreds of years have been doing better, despite losing 1% of our arable land since 1972 every year due to urbanization, commercialization, or industrialization. Bangladesh manages to feed 190 million people, while In 1972, with double the arable land, we only had 75 million people to feed. So agriculture, Bangladesh has attained a good level of efficiency. If we can turn it into commercial and industrial agriculture, this is going to be a big market, and we have a 13% compound annual growth rate in this sector over the last few years, with an emerging $7 billion processed food market. Digital economy, which is going to dominate the global economy for the next decades, more than $2 billion local market, more than $1 billion already and growing export market, and a large pool of trained young IT professionals. Pharmaceuticals and API, $6 billion local market, 98% managed from within the local, from the local suppliers or producers. And then renewable energy in the power and energy sector, which is also highly connected or important priority of Japan's new Asia Energy Transformation Initiative. 20% renewable target, 20% of the total power generation by 2030 needs to be in renewable. At the moment, it's about 4%, and we need about a $980 million, nearly $1 billion every year for next 5 years in the renewable sector. Textile and apparel needs no introduction, second largest. However, the second largest, if can be turned more competitive with the technology, the right skills, and the greening of the sector, sustainability compliance. This sector is on the way to become a $100 billion sector as the world investors and buyer seeks to deconcentrate from the largest RMG supplier in the world, China, who itself is also transitioning to more cutting-edge technology-based sectors and so on. Light manufacturing, $8 billion local market, $20 billion sectoral investment. Semiconductor, early days, but really high potential, $8 trillion, $1 trillion global market. We are now only exporting close to $10 million, but the sky is the limit. But then there are many more, leather and footwear, healthcare, plastics, but in the interest of time, I will move on to the next one. Logistics/connectivity infrastructure. Today, just today, there is an investment opportunity through public-private partnerships and private projects of $4.1 billion. The new port terminals being planned in Chittagong, the Bay Terminal, container terminals, multi-purpose terminal. There is a new terminal being planned at the Laldia Chor. Number of important rail-mounted logistics facility like Dirasram Inland Container Depot, Kanpur Inland Container Depot. The very historic, everybody's favorite Dhaka Kamalapur station is now being transformed into a multimodal hub to connect this primary growth center of the country better with the ports, infrastructure, and the hinterland. And Japan is going to be a big partner in that. Green investments, according to a World Bank Group report in 2019, Bangladesh has $172 billion investment opportunities, sustainable investment. Green buildings, green transportation, even climate resilient agriculture, where countries like Japan, South Korea, and many others have done really well and can take the benefit of this 190 million people population whose purchasing power hopefully will be back to on a continued increasing path. Financial sector is going through major reforms over the last 1 year. I just wanted to give you a sense of the magnitude of the long-term finance that Bangladesh requires through banking, but primarily through capital market, including bond and equity. Infrastructure, according to Global Infrastructure Outlook, $25 to $30 billion required every year for infrastructure in transport, energy, logistics, urban transportation, and urban services. Renewable, as I mentioned, close to $980 million has to come from long-term finance. SME, again, according to a World Bank Group assessment, there is an annual gap of $2.8 billion in Bangladesh. Housing finance, extremely important. This is a big market, 6 million housing units unmet demand, and this is going to rise to 10 million housing units. And our friends from Singapore are already looking into, and some other countries, into housing market and housing infrastructure development, a big opportunity to facilitate the long-term finance to support that. I will take 2 more minutes, my respected chair, because I think I'm just over the time. Strategic investment opportunities, the door has opened now to merger and acquisitions. Why do I say that? Over the last 1 year, the macro is stabilizing. If you look at our balance of payment, we are moving to surplus in current account, but also in the overall balance of payment. Our foreign exchange, which had a 40% depreciation until May 2024, for 3 years, it's been stable since last September. And our foreign reserve is on a rebound from $18 billion BPM, the net method. It is now back to 25 billion. It needs to get stronger, but it is on a recovery path. And there is rates impact. Rising interest rate or high interest rate has made they have made the values depressed. So right time to enter, right time to do the deal. There is manufacturing distress, particularly in some sectors like textile, ready-made garments, due to high leverage of some big investors, but also absence or dislocation of some of the investors for political and many other reasons. But overall, the country, building on these and building on some of the very right reform measures in the financial sector, banking, but also in capital market, where corporate governance is being strengthened, banking, overall bank resolution ordinance is being strengthened, capital market, which has a committee, banking, which has a reform committee, and multiple other technical committees are all looking into immediate further reforms to bring back the financial sector to a very steady and robust growth path. And if you look at 2 of the 3 top rating agencies around the world, S&P, Standard & Poor, and Fitch, despite one of the largest, one of the most intense mass uprising in the history of Asia and world, and some subsequent very natural dislocations, Bangladesh's rating over the last 12 months remains unchanged by S&P as well as by Fitch. Moody's, yes, it has gone 1 step down, but I'm confident this year this is going to come back. But that's 2 out of 3 who still puts their confidence in Bangladesh's growth, and this is where you have a great opportunity to come into Bangladesh's investment space through strategic investment. So macro I've already mentioned, so I will just skip. Is it all that great and there is no challenge, no worries? Not at all. There are worries, and which we need to address. I've mentioned some high-level imperatives that Bangladesh must rise up to: diversification, competitiveness improvement, post-LDC global competition. How do we prepare for that? But there are some inherent challenges in the investment climate and the trade facilitation environment. So we need to improve our port efficiencies. Border clearance is complex, needs to be easier. Logistic cost compared to Vietnam, Thailand, India, higher. We need to make it more competitive. In the power energy, the gas, again, due to man-made failure in energy policies between 2016 and 2024, we have become more reliant than we should have been on imported energy, right? However, we are managing it, but it became a little bit of a strain in the year of 23-24 when we were trying to fix, or we were still dealing with the macro, particularly the dollar reserve issue, but the energy infrastructure and supply and the energy security needs to be better. Productivity is something Bangladesh needs to improve. Skills and technology will be important. Overall regulatory predictability, addressing complex and unpredictable at times, taxation are going to be some of the important areas for Bangladesh. So building on that, I want to say Bangladesh, it has proven it's shock-proof through global financial crisis, through the governance challenges of our own in the past years, through the mass uprising and the post-mass uprising, the economy, the exports continue to remain robust. The location I mentioned, competitive and smart labor, governance coming back to a sort of Asia standard level, if not global, which is going to be a key part of that. And building on that, Bangladesh can prioritize positioning its investment value proposition in light of the shifting global strengths, rising global strengths such as governance, but also in light of the shifting global trade and geo-economic fracturing. As you know, with the reciprocal Trump tariff, Bangladesh has now landed in a much, it is an additional cost, but Bangladesh has managed to land in a more convenient or not in a disadvantaged position at a minimum vis-a-vis its competitors. Bangladesh can accelerate its public-private participation, PPP investment opportunities, as well as privatization opportunities, where models like South American privatization can offer really great insights and lessons for our policymaker. So thank you everyone for bearing with me for a few extra minutes, and I thank BRAC UPL for giving me this opportunity, and I wish this investor conference all the success. Thank you very much.
Thank you, Mr. Mashroor Riaz, for your very insightful presentation, as always. If you want to have an access to his presentation, please leave your email address or the WhatsApp number. We'll have it sent to you. Now I'd like to invite Mr. Saifuddin, CFA, who has been recently appointed as the Commissioner at the Bangladesh Securities and Exchange Commission. Prior to that, Mr. Saifuddin was the Managing Director of IDLC Securities Limited from 2009. He is a seasoned finance professional with extensive experience in capital markets, regulation, investment analysis, and corporate governance. And I also take the pride to say that he was my deputy until very recently for 2 years as the Senior Vice President. Offerings and attract foreign investment and funds. Thank you.
Thank you, Mr. Saiful Islam, and distinguished guests, esteemed investors, ladies and gentlemen. Thank you for the opportunity to speak this year's BRAC UPL Foreign Investor Conference. I have a simple message today. Bangladesh presents one of the most compelling frontier market opportunities in the world. I want to share a story in some parts of the story of resilience, the story of reforms, and rising opportunity. The moderator asked me to address some of the things, some of the the transparency and the future activities of Bangladesh Securities and Exchange Commission as a regulator. I also want to mention some stories about Bangladesh. Our journey begins in resilience from 1971 to this recent uprising in July 24. We have just come out of a very repressive regime. In the last 5 decades, we transformed our war-torn newborn nation into rising economic player in the way forward. We have achieved towards middle-income status with a clear path to upper middle-income country in the coming years. We are not complacent. In the fast-changing world, the choice is clear: open up or fall. Bangladesh chooses to open and to embrace the global partnership to innovation and to complete. As I said, we have just come out of a very repressive regime. The past years tested the resolve. The growth slowed below 4%. Inflation hit double digit. But rather than stumble, we acted decisively. Tightening monetary policy, taking tough reform measures, and restoring investor confidence. The results are here. Inflation is down to 11.7%, down from 11.7% to 8.5% this June. The Dhaka has stabilized. The foreign exchange reserves are back to $25 billion for the first time in the year. The current account is in surplus. It's around $900 million, driven by 25% surge in remittance and 10% export growth. Looking ahead, the inflation is tracked to 6.5% to 7% by this year. Growth projected about 5%. We have regained the macro stability, creating more predictable environment for the business. The Bangladesh opportunity that the keynote speaker actually talked about, very much exhaustive, nothing to say after that. But reality lies in the long-term fundamentals. By the end of this year, the Bangladesh middle and affluent class coming to the 34 million people, about the population of Canada, all within one fast-growing domestic country. Over 60%, as he showed, over 65%, 68% in fact, 68% of the population under working age, and our median is only 28. This is the productive engine, and that's power the growth for the decades. We are the nation of savers as well. The savings rate of our country is 28% of GDP. As we approach $700 billion economy by 2030, that means around $200 billion savings as well. The question is, where will it go? Where will it go? In Bangladesh, historically the too little has followed into the capital market, and that is where the opportunity lies. Now come to the capital market. The capital market in Bangladesh is still in the fledgling stage. It's only 1% of our population actually involved in this in the equity market, and this is the market waiting to deepen. Imagine the impact that names like some of the champions in our country, like some multinational consumer companies and pharmaceutical companies, they are waiting to list it in this country. And here the kicker, the valuations are very compelling in Bangladesh. Dhaka Stock Exchange is now trading at less than 11 multiples. It's much below than our peers. Now come to the reform. Reform, without trust, the market is nothing. So reform is right and center. So we are looking forward to reform the IPO valuation process, margin rules, and the compliance among enforcement regulations that are taking place in the Commission. In the conclusion, the Bangladesh today is dynamic, determined, and on rise. We have stabilized the economy, we have reformed our markets, and our people are young, ambitious, and ready to grow. Our capital market is poised to evolve from an overlooked frontier into vibrant emerging market. This is your chance to enter early while valuation is still low. This is not an opportunity for return. This is a chance to be part of the 170 million people's growth. Like other Asian success stories, those who partner early reap the most when it's take off. Bangladesh is ready. Let's invest, grow, and prosper. Thank you very much.
Thank you, Mr. Saifuddin. So I would like to invite now Mr. Takao Hiroshi, Managing Director of Contextual Investment LLC, which is a research-based a research-focused advisory firm providing accessible investment insights to Japanese online brokers and their retail clients. Mr. Hiroshi brings decades of expertise in global investment management. He has worked at various investment firms such as SG Werber, JP Morgan, and other organizations. Just to give you an idea, I was having a chat with him day before yesterday. So he was giving me his experience. So he was with JP Morgan, bringing the Japanese investment in the US market and also in the South America. And when he was with JP Morgan, he used to visit 400 companies in a year. So now you can think that how many companies he has visited in the world, in the US and in South America. So I'd like to request him to share his experience and let us guide how to move forward. Thank you.
Okay, so let me start with the question of why am I here? About 1 year ago, last year, in August, I was sitting in my office in Florida, the United States, reading newspaper articles, and there was a coverage of a news story about Bangladesh. There's some demonstrations and commotions and the government change. When I was reading that newspaper article, I was like, I don't understand this. I need to fly to Bangladesh to see with my own eyes what's happening there. So I flew here and started asking questions to people at the hotel or cab drivers or restaurant. So what do you think about this political change? And then their answer is generally positive, but guarded. So I felt, okay, this could be interesting. And then I met with stock brokerage people, Black EPL, and Riti. Where is Riti? Can you stand up? She is Riti. And Riti said, oh, Takao-san, but of course, this is the first revolution instigated by Gen Z in the world. And I detected a hint of pride in her voice. So I'm like, okay, that's interesting. I'll buy it. I believe in you. So this is a political change started by young people in Bangladesh, the Gen Z, demanding for improved governance and accountability, transparency. Okay? So those are very important things for stock guys like us. Bangladesh has already proven that you are effective and careful custodian of short-term working capital by way of microfinance. BRAC, Grameen Bank, those organizations did grassroots financing effort and helping small businesses, particularly women, start a business And that has been very successful, and that's why the Bangladeshi economy started to take off. So that very impressive growth coming from primarily a short-term capital and working capital, and iterating again and again small successes to make the industry grow, particularly RMG industry. That need to go to the next stage, and the next stage is involving more long-term capital, meaning equity capital. And in order for equity guys like us to come into your situation, we need to make sure that you have the proper framework, accountability, governance in place. So please work on it, and we will support you. And secondly, the elephant in the room, in this room, who is not very well represented today, is a young people. So while foreigners can come into your market, be careful what you wish for, okay? When foreigners come to this market and foreign direct investment pours into Bangladesh, then that could be a turbocharger of your growth. But at the same time, it could be a tremendously disruptive negative force, because one sign of instability, we're gone. So we are fast money, we're greedy money, and we're aggressive, but we are capricious. In order to keep us in your market, you shouldn't be doing things like violence. No violence, please. You know, the moment we see you going out of control, we're gonna go back to Japan. So please get along, no violence. The difference of opinion is okay, but if you have difference of opinions, talk it over and work out the differences, because you're being watched by international investors. So don't scare them off. And the second thing I would like to talk about, as Mr. Alauddin Mohammed previously talked about, this growth should be inclusive. What does that mean? From stock market point of view, inclusive means everybody participate in the rally and the process of wealth generation. And the best way to do that is to broaden domestic individual investors' base. In the United States, back in the mid-1990s, this law called ERISA law was newly established, and there was a deregulation of, among other things, pension system management, and new system called 401k was introduced. 401k is an individual retirement fund. It's a private fund. And because of 401k program, many small investors in the United States started to own shares, and that made them able to participate in the growth of the economy and the bull market of US market. Now, the stuff like 401k or ETFs, me and Saifu always talk about how to introduce ETF in Bangladesh. We brainstorm that kind of things. Now, these are driven by technology, because if you are just doing trading on a stack of paper, it's not efficient enough. So you cannot accommodate many small investors. So the solution for this is apps. You need to go high tech in order to democratize the investment. So be aggressive developing stock trading apps and be aggressive in deregulating the wealth creation process so that many people will benefit from this. Because some presenters today talked about, the Bangladesh market is shock-proof. It may be, but it may be not. You underestimate the destabilizing force of foreign investors. Once your market opens up, you are doing almost like a Faustian bargain. So you get the accelerated growth, but in return, you may be surrendering your own control of capital markets, and that's a very dangerous thing. So to counter that kind of capricious money, you need to develop a very sound and robust domestic investor base, and the depths of the market should be deeper. That's how I feel about it. Okay? Thank you very much.
Thank you, Dago. Thank you very much. Now I'd like to invite Ruchir Desai, CFA. Ruchir Desai is the co-fund manager of AFC Asia Frontier Funds at Asia Frontier Capital, where he has been managing investments across frontier markets including Bangladesh, Vietnam, Sri Lanka, Georgia, Kazakhstan, and also in Iraq, if I'm not wrong. Prior to joining AFC, he worked at Hands-On Ventures, a private equity firm in Mumbai. He holds an MBA in finance and also a CFA charter. And I would like to request Ruchi to share his experience in Sri Lanka, because we call him a Sri Lankan guru. So he has been going through the total transition of the Sri Lankan market for the last 3 years. So I believe that he will share some of his experience, that how Sri Lanka is coming back from a very, I would say, odd situation just 3 years back. Ruchi, over to you.
Thank you, Saiful, and thank you, Bragg, for having me over here. It's a great honor to speak to so many distinguished guests. Before talking about Sri Lanka, I'll talk about my experience in Bangladesh, so I think that's more important. So I've been covering frontier markets since 2013. I remember being very excited about Bangladesh, 12 years ago, because it was, GDP growth was, 6% plus. You had a large young population. Things were going pretty well. And I'm from India originally, so kind of resonated with me seeing India 15, seeing the growth story in India, from 2000 onwards, how it's done pretty well. So you were doing 6% plus GDP growth between, in the 2010 to 2017, 18. So, for us as an investor in Bangladesh, between 2013 to 2017, 18, things were going pretty smoothly. You still have had that time also very well-run companies. Economy was doing well. There was not too much of regulatory burden on many sectors, at least until then. So things were going pretty smoothly. I think to put in the Sri Lanka context, things, all the negative events or negative consequences don't happen in 1 year or 2 years. It takes over a period of time, like we saw in the case of Sri Lanka. So I think, foreign investor confidence at least started ebbing for Bangladesh, at least in our opinion, on my opinion, from 2018-19 onwards. There was talk about interest rate caps coming in, which eventually did happen when the pandemic struck. I remember in 2020, the stock exchange was shut for about 1 month, or a little more than a month. So investor confidence took a hit because of these issues in the banking sector. From the stock market regulator perspective, you had regulatory overhangs in the telecom sector. So very important sectors, which are very important in the stock market. They were high weight in the index, had regulatory regulatory burdens. You had some of these issues, and of course, growth started slowing down. So you had, from the period from 2020, 2024, a lot of negative consequences all adding up, which eventually led to the events of last year. And that takes me to Sri Lanka story. Sri Lanka had not just 1 or 2 tough years. To end of 2018, they had a constitutional crisis. In 2019, they had the Easter Sunday attacks, which affected tourism. And then in 2020 and 21, you had the pandemic, which again affected the world economy and the tourism sector as well. And then 2022, obviously, that led to the events of 2022, political protests and change in government, similar to what happened in Bangladesh last year. At the same time, when all these events happen, people think very negatively, people are not very optimistic, there's a lot of pessimism on the ground amongst investors. But just from an investor's perspective, those are probably very good opportunities just from a long-term view. Because firstly, on a bottom-up basis, companies, both in Bangladesh and Sri Lanka, I would say in general, in the frontier and emerging market universe, are very well run. Fundamentals are very stable. So yes, there are issues in the banking sector in Bangladesh, but you have companies in the consumer space, some of the well-run banks in telecom. Fundamentals are very stable. And the point I'm making is valuations in Sri Lanka bottomed out end of 2022. I remember the P/E ratio of the whole market was about 4 times at the end of 2022, beginning of 2023. And you had a similar situation of high inflation, high interest rates. And of course, Sri Lanka had an even tougher time. In fact, they defaulted on their sovereign debt. Bangladesh has not defaulted on any kind of government or public debt. And things started improving from then, from I would say mid-2023. Inflation came down quite significantly because interest rates were raised quite aggressively, similar to what is happening in Bangladesh now. And you saw kind of the investor enthusiasm coming back, economic activity picking up, exports doing well, remittances doing well, currency stabilizing. So you saw a pretty strong stock market recovery over the last 2.5 years in Sri Lanka because not because the macro indicators stabilized in terms of inflation, interest rates, exports, remittances, tourism earnings, but more importantly, confidence came back, right? So I think that's the critical part. I mean, you can have a great economy, great companies, a lot of potential for pharmaceuticals, infrastructure, consumer, a large young population, but if you can't create stability and confidence within not just foreign investors, but within your own domestic economy, the economy won't take off, or the confidence won't come back. And I think one critical point has been in Sri Lanka, they've got the stability back. They had successful elections last year, which was, I think, a turning point for the country. So besides just, stable macro environment and stable policies, things coming back from macro perspective, they had very successful elections, which led to a very strong political platform for the country. So what you have in Sri Lanka now, which was not present for the last, I would say, 5 or 7 years, you have a very strong macro environment and a very strong political environment, which is why it's not just about the stock market, which is why you've seen a lot of confidence come back amongst the consumers, amongst the corporates. You speak to any bank in Sri Lanka now, they're talking about 15-20% loan growth, GDP growth every quarter is well ahead of expectations. So for me, this resonates, the Bangladesh story now resonates with Sri Lanka. Especially given what's happened in the last 3 or 4 years. You have inflation now coming off. It's still a bit sticky, but it's coming off. Interest rates have peaked out in my view. Valuations are at the bottom, like many speakers have mentioned. If you look at the P multiple for the MSCI Bangladesh index at about 9.7 times versus 16, 17 times 5 years ago. But incrementally, you're seeing positive. Remittances are strong. Exports have come back. The current account is in surplus. So all those positive indicators are in place. So in my view, the positive catalysts are in place for Bangladesh to see a near-term re-rating in its stock market. I think what will really drive more confidence amongst investors is once the elections or there's more political clarity next year, eventually. And that could potentially be a turning point for, I would just say, not only for the stock market, but potentially for the country as well. So all those things put together, you could see a pretty good run from economic perspective in Bangladesh for the next couple of years. But this comes back to my earlier point. I think building confidence or giving confidence to investors, especially foreign investors, especially of the events of the last few years in terms of floor price limit, interest rate caps, all the other issues in the telecom and banking sector. If the regulators or if in general the authorities can give confidence to investors that there can be a stable operating environment in the country with a long-term view, then I think this talk about the next 12-18 months being good for Bangladesh is not right. I think the next 5-6 years should be good for Bangladesh if you can build that stable environment, because the platform has been set. We've got the demographics, we've got the size, we've got the economy. So nothing should stop Bangladesh from meeting its potential with a long-term view if you can bring that stable policy environment in place. I think that's the critical point, besides just the opportunities in various sectors. So with that, I think I can hand over back to Saiful and look forward to hopefully getting more returns from Bangladesh. Thank you.
Thank you, Reggie. Thank you very much. We all have been waiting to hear from our guest of honor, but before that, I would like to hear from some of our distinguished guests. And to start with, I would like to request Mr. Barrister Fuad, who is with us. He is the General Secretary of AB Party and one of the most popular political leader among the young folks. So I would like to hear from Mr. Barrister Fuad that what they are thinking about the stock market going forward. Thank you.
Thanks, dear hosts, ladies and gentlemen, of course, our best friends and development partners from Japan. When I was listening to the presentation of Masur, it took me, because as a student of history, that took me to 16th and 17th century, why the East India Company was registered in 1600 in London Stock Exchange, and then they decided to trade in India. And if anybody looks back to the history of the Bengal Delta, it was the richest province of that time. 1600, 1700, 1800, Mughal Empire used to produce around 26 to 28% of the global GDP. And out of the Mughal Empire, the Bengal Delta was the richest of all provinces. It itself used to produce 13 to 14% of the global GDP. And the kind of things that drove the Delta into so much prosperity at that time, it was the aspiring people of the land. It was innovation. If anybody was familiar with history, muslin was the lucrative things for the royal families of the Western European capitals. And the kings and the queens, princes used to order for 11 months in waiting to have that muslin for their wedding. So that was the things that Bengal used to produce. Atlantics, Pacifics, and all the forces used to fight for influence around, have the boats and the ships for the kind of warships equivalent of the time used to be produced in Bangladesh or the Bengal Delta, historical Bengal area. So we, despite all the challenges, our history is full of suspenses and adventures. Yes, there are times that we fell back, we had difficulties, but it is inherent with our land and the people that we rise again like the phoenix, again and again. We keep ourselves moving, we dream of the things that no one else dreamt. There was a historian Gokhale used to say it, what the Bengal used to think today, India thinks tomorrow. That's the kind of intellectual advancement that the Bengal Delta had in our history throughout centuries. So yes, there are difficult times, but I can assure, and you can see all the political parties, Khosrow is here, and hopefully the next finance minister of the country, and he can assure, and other political activists, that we're all here to confirm that investments, investors, safety, deregulation, investment, climate improvement, all of the things that is required, and in particular, of course, getting the capital market flow in favor of the people, not for the oligarchs. These are the things that, of course, we agree to it, we have fought for it, we talked about it, and there is no going back things. So I thank the organizers, the host, for bringing our Japanese friend back into business, and we are here, we are going to fight for you as well on the streets. So the better climate, the better trading environment are given by the state and the government of today and the future governments. So we are all together to have that political stability, and our learned, one of the friends at the panel was saying, no more violence. Well, of course, human history is full of violence. We simply know no country, not even the Europe. I lived in London for many years. No, not any of the countries can assure of that. And of course, given the high level of young population yet unemployed, graduate unemployment, there's a lot of things here. So simply these are not things that we can tell you like the biblical truth. This is going to happen. But of course, we are on board. There is no disagreement of your expectations, and we're going to fight that on the streets and in a democratic process. So climate of investors, the things they expect from us are not breached. They're there, and the mass uprising happened last year should be the last one in our history. So investment, trade, business are the foremost priorities in the coming years. Thanks, host and everybody. Assalamu alaikum.
Thank you, sir. I would like to invite now Mr. Selim Aref Hossain, former BRAC Bank MD. We all know him. He was the MD and CEO of BRAC Bank from 2015 to 25. He previously led IDLC Finance and held senior roles at ANZ, Greenless and Standard Chartered. So we would like to hear from him about the banking reform and the banking sector going forward, because we can see that the foreign investors have keen interest in the banking sector, and we believe that he is the best person to speak about the banking sector from the audience. Thank you.
Thank you, Saiful Bhai. Assalamu alaikum and good afternoon, ladies and gentlemen. All of you know, of course, the banking sector is one of the biggest challenges that this country, importantly, it has been recognized, and there are multiple initiatives going on to fix all this. Very recently, I think it was just a couple of days ago, that one of the policy think tanks of the country produced an assessment of the last 365 days of this interim government. And I am happy to say that the area of the banking sector, the central bank initiatives, actually came out green, right on tap. So the fact that the banking sector has been stabilized to a great extent, of course there is enormous work to do, but those work streams are also in place. The fact that the overall macroeconomic environment has been stabilized in terms of the balance of trade, in terms of the stabilization of the foreign currency itself, in terms of the reserves, in terms of the allowing exchange rates to become market-based, which is a big change over the last many years. All that is a big, big positive. Nevertheless, there is an enormous amount of work to do, but the central bank and the governor is doing a pretty good job. They have three large areas that they're working on. One is the the strengthening, the capacity building of the central bank itself. The other is an assessment of the real situation, the gap in the banking sector. Most of that work is also almost done. And the last, of course, is an asset recovery effort that is also doing quite well. If you look at the newspapers for the last couple of days, some of us will have noticed that a few large assets in Europe have been recovered, haven't yet been recovered, but the litigation process is quite favorable to Bangladesh. So there is a lot of that needs to still be done. So directionally, everything is still very good. A lot of challenges ahead. Nevertheless, we are quite confident under this central bank and this governor, who certainly is a big success. There's not much more I'd like to say. May I make one comment to this August gathering? Earlier today, a few colleagues, friends from the stock market sector, if I may use that term, mentioned that one of the reasons that the capital markets in Bangladesh are not doing well is because the money markets or the banking sector has taken over a lot of the liquidity. The fact of the matter is, I think the capital market itself, and particularly the regulators, need to take a long, hard look at themselves. What do they need to do to make it much more attractive for the many hundreds of scrips, good stocks, good companies in Bangladesh to become listed? There are at least a dozen companies with multi-billion-dollar sales in this country who are not yet listed on the Bangladesh stock indexes, either Chittagong or Dhaka. Now, why is that so? It is simply that they do not find it beneficial. The costs outweigh the benefits. So it is up to the government, the regulators, to find ways to attract all these Bangladeshi stocks into the stock market itself. Thank you, ladies and gentlemen. Thank you, Saiful Bhai.
Thank you, Selim Bhai. So we have heard the perspective of a managing director. Now we would like to hear something from the banking sponsors or owners or the banking board. I would like to request Mr. Abdullah Sarkar. Mr. Sarkar is the chairman of Bangladesh Association of Banks, BAB, and also the chairman of Dhaka Bank. We all know that he founded Purbani Group, a leading textile conglomerate, and served as president of BTME. He holds a master's degree from the Dhaka University in management, and also he is a founding trustee of Independent University. Mr. Abdullah Sarkar, please.
Distinguished presence and distinguished ladies and gentlemen, actually I have not prepared to speak to you all in here, as I have not been told before that I have to speak out something. But anyway, since I am requested to speak something, so I am taking. What I understand is that the whole seminar has been arranged to invite foreign investor in the capital market, if I am right. So our capital market actually very hungry for investment from outside, in order to replace the foul player in the capital market from retail development. So I think the foreign investor, like if Japanese people invest in the stock market here, definitely the market will be, I'm sure it will come up, and the local infrastructure, right now the government in power, they are very much, bringing changes in overall system in Bangladesh right now, both in the economic sector, financial sector, and industrial sector. Every place they are taking a lot of good steps to carry forward our industrial sector and financial sector on right track. So for which all the supporting people around also require their support to help us to improve our overall financial and industrial investment in here. And our stock market is still very backward, I have to say that, and most of the foul games are played in there. So my appeal to the Securities Exchange Commission, while allowing any companies to come to the stock market, they should double check the people who want to enlist into the stock market to sell their shares. So that is one of the areas I think we should be very, very cautious in recommendation and approval of companies to come into the stock market, because we have to see the background of the company. When they come to the stock market, we have to see that how long this company is going to be on the right track. So this kind of, we got double checking on these kind of things. On the good stock come to the market, definitely the genuine people are also interested to invest in the stock market. So it will finally help. These are the stock market barometer of the economy of the country. So stock market we have to try to promote properly with all the supporting factors so that the local and foreign investor become interested. So I think I don't need to prolong my word, because lunch is very nearing now. A lot of people may be starving for lunch. So I, with this big word, I once again wish very successful conclusion of this seminar. Thank you very much.
Thank you, Mr. Chairman. So we all know that we have been going through the massive macroeconomic reforms, and fortunately we have one of the economists here who has been involved with many reforms, economic reforms that we are going through. May I request Dr. Zahid Hussain for 2 minutes just to let the investors know that what are the reforms that we are going through. Dr. Zahid Hussain is a former lead economist at the World Bank, specializing in macroeconomics, trade and investment. He holds a PhD and MA in political economy from Boston University and an MBA from IBA Dhaka. He has also served as a director at BRAC Bank and BRAC EPL. Thank you.
Saiful for putting me on the spot without notice. I have heard a lot of observations about how the economy is doing, so I don't have much to add in that respect. But looking at the investors here, I'm sure you've come with expectations about opportunities in Bangladesh market. One thing that I can advise is that if you want to invest in Bangladesh's capital market, you have to be prepared to play the long game, not short-run, footloose type of investments. And by long, I don't mean long enough when we are all dead. I mean not too short. If you have an investment horizon of, say, 3 to 5 years, you will probably, nobody can guarantee returns, but if you hold on, you will probably be ahead in terms of your returns. So with that, I wish you all the best of luck. I mean, the global economy is going through a very volatile period, and we hope this will calm down eventually, and the stock markets will find their usual rhythm, not just in Bangladesh, but elsewhere around the world. And once we have global normalcy, I think the Bangladesh markets will catch up the deficiencies that it had in the past. Thank you very much.
Thank you very much, Zahid bhai. So now we are a conclusion. Now we like to conclude the session with the and we should hear something from our guest of honor, Mr. Antipiracy Mahmood Chaudhary, who doesn't need any introduction, but as we have many foreign investors, so I should say something about him. Mr. Chaudhary is a distinguished business and political leader with a legacy in trade policy and capital market development. He has been an elected member of parliament, MP during 1991 to 2006, and was the Minister of Commerce of Bangladesh. He is also the founding chairman of the Dhaka Stock Exchange, former president of Dhaka Chamber of Commerce and Industries, and the first president of Federation of South Asian Exchange. I would like to invite Mr. Antipiracy Mahmood Chaudhary on mic. Thank you.
Thank you, Saiful. I'd like to congratulate, first of all, BRAC EPL for organizing this event today, perhaps at a time when the country is at a crossroad, politically, economically, and otherwise. And bringing such a large delegation from Japan, and Japanese friends are here. I welcome all our friends from Japan. Arigatou gozaimasu. I don't know if I pronounced it right or not, but that's the best I can do. You have heard so much from the previous speakers about the capital market and future of capital market in Bangladesh, and how investors should find Bangladesh in the future economic perspective. One thing I can assure you right now, in Bangladesh, not just the politicians, people across the board, the uppermost on their mind is the economy of the country. And Bangladesh economy is not going to be beginning. We have had a fairly good beginning post-liberation, 1972, 73, 74 onward particularly. The country transformed from command economy to market economy, one-party system to multi-party democracy. A lot of political reforms and economic reforms that saw Bangladesh over the years, as some previous speakers mentioned, 6% growth rate on average. And Japanese have had a footprint, very strong footprint in Bangladesh. So they are not coming here for the first time. They have well invested in Bangladesh, starting from the large industries to infrastructure. And Japan has been the largest bilateral
donor for Bangladesh. I think it still is. So when we left the government last, the growth rate was 7.06%. And the curve was looking like this, upward. Of course, it was disrupted over the last decade and a half. And then the mass uprising. But the economy, resilience is so good. Bangladesh withstood all this and still carrying on after so many upheavals, turbulences, recovering, turning around very fast. The reason is one. The reason is Bangladesh's economic foundation is very strong. Because we have been able to make some reforms bearing in mind the market to operate freely. And that brought in a lot of private sector investment from within and from outside. Bangladesh is the first country in this whole of South Asia to set up economic zones, export processing zones. Bangladesh is the first in South Asia to go for free market economy and private sector-led growth. So the emphasis was on the private sector. And they are the only ones who can drive the economy. This was the faith in economic planners of Bangladesh. And that has paid dividend. And private sector came up in large numbers. Example is Bangladesh ready-made garments, textiles, leather sector, seafood sector, and many others. And the policy of, the reform policies of deregulating also paid dividend. So that Bangladesh economy not had done fairly well, fared quite well, but the social sector has done very well. Bangladesh's social indicator is about the best in South Asia today. I repeat, Bangladesh's social indicators are the best in South Asia. Because it reflects that how the economy also had taken care of people in general. Poverty alleviation, women's empowerment, and all the rest of it have done very, very well in Bangladesh. And this is why the foundation of this economy is so strong and withstood all this turbulence that Bangladesh has gone through. So that gives us the confidence that with a new government, democratic order back in the country, everybody's on their uppermost on their mind how the economy is going to do. Believe me, we are all focused on economy right now. And for economy, capital market is inevitable. I agree. The capital market should have done a lot better as much as the economy had done in the past. That has not been fully achieved. So the gap the capital market could have fulfilled supporting the economy has not happened as much as it was expected. As a result, there was heavy borrowing from the high street banks. And that's a mismatch. Clearly, the high street banks' deposits are basically mostly on short-term basis. And capital market lending is short-term, long-term basis. So there's a huge mismatch of financial order, and that cost us dearly in our financial sector. So the now focus, because it's very relevant to today's discussion, now the focus is on our capital market. Where do we go from here? And this huge gap of financing, where does the capital market come in? And this is a very interesting scenario. This is where we all come into the new playbook for our economic development. Unless we develop capital market, we really cannot come out of the financial issues that we have had recently. Of course, that happened through an economy of patronization, oligarchy, and all that. That didn't help. Now, we have to address very seriously how we go ahead with our capital market. And I'm so glad that our friends have come at a time when we are planning big. I think our friend from Japan mentioned that Bangladesh needed turbochargers, you know. I can assure you, I think turbocharger is going to be in place in Bangladesh. It is going to be in place. And we are fully committed, going forward, how to address the issues of capital market. Because we didn't have enough blue chips companies coming into the market. We didn't have institutional investors coming in the way that they should have done. We did have a lot of retail investors, of course. And of course, all the frontier funds and the emerging funds was coming, but somehow wasn't enough to build up the depth of the capital market. Unfortunately, as I said, the GDP market cap ratio, we are one of the lowest, unfortunately. Although this is surprising how the economy has done well, 6% growth rate, 7%, 7.06 when we left the government, that did not reflect in the capital market. And that should have happened, quite honestly. Now, this is the time that we are addressing it. We need to create the depth of the market. We need good companies to come into the market. We need institutional investors, retail investors, of course. Oh, okay. I've been requested to speak in Bengali because the press is complaining. I'll come to that, okay. I'll do that at the end of it. So we need to have a lot of, we need to create a sovereign fund. We need to create corporate funds. We need to have green funds. And this is all people have been talking, and because what brings me to this subject, I'm getting lot of fund managers coming to Bangladesh right now. And they are all, even the mission chiefs in Dhaka are talking about the funds, you know, the bonds and equities that they would need to, it's equity is on its, Bangladesh has had another problem, by the way, that over the last decade and a half, we saw a lot of the economic dependency really happened with debt and printing money. So you can imagine when you go for such option, for printing money in the debt-based economy, so it's not sustainable. Now we have to move from the debt-based economy and printing money into investment-based economy. And this is where you come in, my friends. I think we are ready for sovereign bonds, we are ready for corporate bonds, green bonds, and all other portfolios or products that capital market needs in Bangladesh. Because the gap, as I mentioned, is very big right now. Between the high state borrowing and the capital market, what should have happened? This is where you all come in. Bangladesh is going to, we are ready for a boom, I can tell you this. But in order that to happen, this mismatch we have to come out of, and we have to fill in with the proper portfolios in the economy. And for that, there is a political consensus, as you have heard the speakers. As for my party was founded purely on the value of democracy and free market economy. And we have been patronizing the private sector-led growth right from the beginning. Our motto is the private sector-led growth, and that is sustainable. And I can promise you for capital market in the future, the next government, whoever comes, but if we come, we will fully own the capital market. Absolutely, no question about it. And any reforms needs to be done will be done. Any reforms. We are going to be highly deregulated economy. We are going to be the trading post, welcome, open, 24/7. This is the environment Bangladesh is going to have in the future. And we're fully committed to this. I'm saying it day in, day out, the same thing over and over and over again. Just to drill through everybody's head, including politicians and the rest of the stakeholders, to own it and go forward. I can assure you, this is the Bangladesh we are waiting for. A boom is coming. Turbocharger is in place. So our Japanese friends, I can assure you, we will be with you all the way. And Japanese have a good footprint in Bangladesh as it is. We have worked with them together bilaterally, and all the private sector that came, they have all done well in Bangladesh. So I'll end with this. For the press, I have to say a few words in Bengali. Excuse me for that. বাংলাদেশ এখন ইকোনমিকে উচ্চ পর্যায়ে নিয়ে যাওয়ার জন্য প্রস্তুত। বাংলাদেশ এখন বিনিয়োগকারীদের, দেশে বিদেশের সব বিনিয়োগকারীদের সাথে নিয়ে আগামী দিনের বাংলাদেশের জনগণের যে আকাঙ্ক্ষা, যে প্রত্যাশা জেগেছে, সেটা পূরণ করার জন্য প্রস্তুত। এবং ইতিমধ্যে নির্বাচনের খবর দেশে বিদেশে সব জায়গায় চলে গিয়েছে। সবাই নির্বাচনের অপেক্ষায় ছিল। যেহেতু নির্বাচনের খবর ছড়িয়ে পড়েছে, দেশের মধ্যে উদ্যোক্তারা প্রস্তুতি নিচ্ছে, দেশের বাইরের উদ্যোক্তারা প্রচুর প্রস্তুতি নিচ্ছে, যার ফল আজকে আমরা এখানে দেখতে পাচ্ছি। আজকে বিশাল একটা ডেলিগেশন জাপান থেকে আসছে বাংলাদেশে বিনিয়োগ করার উদ্দেশ্যে। সুতরাং আগামীর বাংলাদেশে বিনিয়োগের মাধ্যমে আমরা ওই টাকা ছাপানোর থেকে, ঋণ নেওয়ার থেকে বাংলাদেশের অর্থনীতিকে বিনিয়োগের দিকে নিয়ে যাব আগামী দিনে। এবং বিনিয়োগ হচ্ছে একমাত্র আনসার। বিনিয়োগের বাইরে গিয়ে অন্য কোনো উপায়ে অর্থনীতিকে সাস্টেইনেবল, টেকসই করা যাবে না। এবং আমরা সকালে মিলে সেই কাজটা করতে যাচ্ছি, সেই প্রস্তুতি নিচ্ছি আগামী দিনের বাংলাদেশের জন্য। দেশি বিনিয়োগ, বিদেশি বিনিয়োগ এবং ক্যাপিটাল মার্কেট কে আমাদেরকে উচ্চ পর্যায়ে নিয়ে যেতে হবে। কারণ ক্যাপিটাল মার্কেট ব্যতীত আসলে লং টার্ম ফাইন্যান্সিং সম্ভব নয়। এখানে আমি একটু যোগ দিতে চাই, জাস্ট সরি আই এম স্পিকিং ইন ইংলিশ। লট অফ because of there was absence of strong capital market, you see everybody, every penny, every dollar, every taka was coming out government exchequer. Government is not supposed to government is not supposed to spend all the money. The capital market is there to fund it. Like the autonomous bodies in Bangladesh, they must operate like an enterprise, like the Biman. They must operate like an enterprise. Why should the government exchequer fund for purchasing Biman? They can go to the capital market. The municipalities, there are municipal bonds function everywhere. Why can't we float the municipal bonds? Municipalities are profitable enterprises. There are so many profitable enterprises which can be funded by the bonds, municipal bonds. Like that, government exchequer should not be overloaded with all this expenditure. They should all go to the capital market. So if you can do that, you'll find that there will be enough for the social sector, for the upliftment of our poverty and our infrastructure investment and other areas. So the economic structure has to change. We cannot function with the old economic structure. Bangladesh has a great potential with artisans. You know, Bangladesh have artisans all around the country. And their product is never monetized. We like to monetize their products. We like to give them technical support with designing, with the input they need, with branding, with selling platforms like Amazon and Alibaba. One village, one product is not an invention. It's happening all over the world. People are working from home, selling direct through Alibaba and through Amazon. আমাদের দেশের এই সম্ভাবনা গ্রামে গঞ্জে যারা আছে তাদেরকে সবাইকে তার জায়গায় ইকোনমিতে ইনভলভ করতে হবে। তাদের প্রোডাক্টগুলোকে আমরা ব্র্যান্ড করতে হবে, টেকনিক্যাল সাপোর্ট দিতে হবে, অর্থনৈতিক সমর্থন দিতে হবে। এবং এইগুলো সারা বিশ্বে সরাসরি এক্সপোর্ট হচ্ছে এখন। ওই ঢাকাতে আসতে হবে না, চিটাগাংয়ে যেতে হবে না তো। You don't have to come to big cities anymore. Things have changed. People are working from home. There is a less of migration, pressure on big cities. বড় বড় শহরের উপর চাপ কমে যাবে। So this is another aspect of economy we are looking at. We have named it creative economy. This creative economy will embrace a large section of Bangladeshis who have been left out of the economic activities in the past. They will all be taken into the economic activities. They will all be participants. So, as I said, Bangladesh is ready for the boom. Turbocharger is in place. Let's go forward. Thank you.
Thank you very much, sir. To echo with the audience, the would-be Finance Minister, thank you once again. So we are coming to a conclusion. Thank you for being with us today. We'll take a lunch break. Riti, over to you. Thank you.
Yes, sir. Round of applause, ladies and gentlemen, for Mr. Amir Khosru Mahmood Chaudhary, guest of honor, to Dr. M. Mashur Riaz, to Mr. Mohammad Saifuddin, CFA, to Mr. Taka Hirose, and to Mr. Ruchi